What's up everyone, my name's Robbie. This is Robbie in Manila. Now today we're talking about stock picking, but we're also talking about something called the Piotroski F Score. Now when it comes to stock picking, I think we'd all agree that there's like a sense of mystery around it. Now a select few people have been able to use the stock market to literally make billions of dollars, while quite a few people have been able to build their net worth using the stock market, get away from that 9-to-5 job, create financial independence. But the thing is, investing in the stock market, especially when you're starting out, can be completely overwhelming. When I think back to when I started as a financial advisor, I really wasn't taught about individual stock investing. It was all mutual funds and insurance, and while mutual funds and insurance and ETFs, they all have their place, what's really exciting, at least for me, is more of the finding stocks to buy. Now, if I was to go back and do this all over again, one of the first things that I will want to learn is called the Piotroski F Score. After all, Joseph Piotroski in his research paper was able to show over a 20-year period from 1976 to 1996 that his F score was able to beat the market by 13.6%. But what's even more amazing is that if he also shorted the worst performing F score stocks, he would have had a 23% return over that time period, where the market did just over 15%. Now you may be asking yourself, okay, well that test was done like a while ago, but does it still work? And the answer is, yes it does. Take a look at this back test from Fat Pitch Financials. Now the highest Piotroski F score is a 9. Now this is showing that stocks with a median F score of 7 from 2000 to 2014 had an annualized return of 12.41% versus the S&P 500 7.42%. In this chart you can see the red line shows the outperformance of these F scores versus the S&P 500, which is the blue line. Another backtest by Equities Lab from 2004 to 2014 shows the highest F scores with a 14.15% return versus a 4% return for the market. Even if you had invested in the second best F score stocks, you would have had a return of 11.34% versus the market, which returned 4.23%. So hopefully you're realizing that F score might be a powerful tool that you can use to help you find stocks. So now let's figure out how F score works and how you can use it to find stocks. So the F score was created by an accounting professor at the University of Chicago named Joseph Piotroski. He wrote a paper in 2000 titled Value Investing: The Use of Historical Financial Statement Information to Separate Winners from Losers. And his research paper was published in the Journal of Accounting Research. So if you look at the title of Joseph Piotroski's research paper, the first two words are value investing. Now I'm someone who identifies as a value investor, and I've actually naturally gravitated towards this F score. Now in order to understand the Piotroski F score, you should understand the methodology he used. The first thing he did was he took the top 20% based on the book to market ratio. Now if you're not sure what the book to market ratio is, it's actually the inverse of the price to book ratio. And if you're not sure what the price to book ratio, think about it like the net worth of the company divided by the price the stock's selling for. So if a stock has a low price to book ratio, it could mean that the stock is cheap. So for a real world example of a price to book ratio, Apple has a price to book ratio of 28. While United Airlines only has a price to book ratio of 1.28. So in terms of price to book ratio, Apple is definitely not considered cheap, and United Airlines is considered cheap, but there's also a lot more that goes into it, of course. But just know that in the example, Apple probably wouldn't have shown up in that top 20% of cheap stocks, while maybe United Airlines would have. So after Piotroski screened the 20% highest book to market stocks, which happened to be the lowest 20% of the price to book stocks, he then calculated his F score. So the F score is a point-based system. A 0 is the worst and a 9 is the best. Now there's 3 categories that the F score measures. 1 is profitability, 2 is funding, and 3 is operating efficiency. Now you don't need to ravage through a financial statement of a company and calculate the F score yourself, because there's tons of websites that do it for you, which we'll go over in a second. But to quickly understand F score, let's quickly go through the 9 factors. So the first category for F score is profitability. And there's 4 different metrics for profitability. There's return on assets. So if the return on assets is positive, then there's 1 point awarded. If the operating cash flow is positive, it also gets a point. Otherwise, it gets no points. If the change in the return on assets for the prior year is positive, it gets a point. If not, it's not awarded a point. If operating cash flow compared to return on assets is more, then it gets a point. And if it's not more, then it does not get a point. Then there's leverage, liquidity, and source of funds. So for leverage, it uses the change in long-term debt divided by the average total asset ratio. If the ratio compared to the prior year is lower, the F score gets a +1. If not, it gets a 0. For liquidity, it looks at the change in the current ratio So if the current ratio increases from the prior year, it gets a point. If not, 0 points. And if the common equity increases compared to the prior year, the F score gets a 1. If not, it gets a 0. So first we're looking at the change in margins, and they use gross margins. And if the gross margin ratio is positive for the year, then it gets a +1. If not, it's a 0. Next, it looks at the asset turnover ratio, which is revenue divided by the beginning year total assets. If the current year's ratio minus prior year's is more than 0, F score gets a 1. If not, it's a 0. And finally, the current ratio looks at the change in asset turnover ratio, which is revenue divided by beginning year total assets. If the current year's ratio minus prior year's ratio is more than 0, F score gets a 1. If not, it gets a 0. So hopefully you're realizing now that the Piotroski F score can really help you weed out garbage companies, because the majority of poorly run companies aren't going to score well on Piotroski's F score. So the next question is, how do we find Piotroski's F score for companies, and how do we use it to our advantage? So the first website I like to use for Piotroski F score is called Guru Focus. Now, all the websites I'm going to go through are free, so you don't have to go ahead and sign up. However, Guru Focus does have the option of a paid version, so you'll get a lot more info if you want. You can see Piotroski going back for a few years and things like that. So something that's a great tool to use if you want to, but I'm just going to go through the free version right now. So if we go down to the left side of the screen here, you're going to see the Piotroski F score for Cheesecake Factory, which we're on Cheesecake Factory here, is 4. So the Cheesecake Factory doesn't have a very high F score. I tend to like an F score about 7, 8, or 9, preferably 8 or 9. Now, of course, I will bend the rule and I'll look at companies where I think there are exceptions and they're great companies and they have other things going for them, but really 8 or 9 is where I kind of like to see it. So you can also go ahead and you can click the Piotroski F score and it'll show you some information about Cheesecake Factory. Now what's great about this is it shows where it is historically over the past 10 years. So the minimum Piotroski score it's had is a 4. The median is a 6 and the max is a 9. Currently it's at 4. You can also go down here and you can see since 2015 where it's scored. For the year 2015 it was an 8. 16 it was an 8, 17 it dropped to a 5, a 6, and a 6. So of course if you have a paid version of Guru Focus, you can see further back, but here we can only see back to 2015. What's also great about Guru Focus is you can see different F scores based on competitors. So here we have competitors of Cheesecake. Krispy Kreme has an F score of 0, probably because there's a problem with Guru Focus, so maybe that's an outlier, but we can look here. Cafe de Coral Holdings has an F score of a 5. Auto Grill has a F score of a 5. Amrest has an F score of a 5. So all of these companies are all in the 5 region. None of its competitors have a higher F score, which shows that the F score actually isn't too bad within the industry, but maybe it shows that the industry is having some problems at this point in time. You can also see the Cheesecake Factory's Piotroski F score distribution, so we can see how it does in the industry. And then you can see the sector distribution as well. So let's take a look at one more company just to see. So let's take a look at Apple. So here in Guru Focus, you have Apple. It's trading at 473. And now if we go down, we can see the Piotroski F score of 7. Like I said, I prefer to see a Piotroski F score of a 7, 8, or 9, and I prefer an 8 or 9. Now in Apple's case, it's a 7, which is very respectable, and it's definitely a stock that I would look at and look further into if I was interested. But even if Apple was a 5 or a 6, I would still look further into the company because I know it's a great company and I'd want to understand why it's so low. Maybe there's something that actually is okay with the company and I'd be okay buying it. So besides Guru Focus, if you want to use a free screener, there's something called chartmill.com that sometimes I use. So this is a screener, and if you go over to Fundamental, you'll see Piotroski F score down here. You can put this up to whatever you desire. So I'll put it at a 7, and then it's going to show me all the different companies below. Now the first thing you're going to want to do is make sure that you change the view so that it says FA table. Now you can see the right side here, it says F score. So these are all companies that have F scores of at least a 7 or higher. You can also sort it, so if you want the highest F scores of a 9, you can take a look there. Now remember, Piotroski took the top 20% of the lowest price to book ratio, so what you might want to do is first sort for price to book ratio, then sort for Piotroski. So however you use this metric, it's great to use it in conjunction with other metrics. It's not a one-size-fits-all thing. You shouldn't say that just because it has a good Piotroski score that you're going to buy it, unless you're going to do what Piotroski did, which is buy every single company that has a high F score of 8 and 9, and or also short the companies that have a low F score of 1 or 2. So hopefully now you understand a little bit more about Piotroski F score. Now, I use F score all the time, but I don't just use it. I use it in conjunction with a lot of other stuff. For me, Piotroski F score is a great garbage filter or trash filter, and it basically weeds out a bunch of really bad companies. So a lot of times if you screen for something like a low price to book ratio, you're gonna get a bunch of garbage. But using Piotroski can help you find stocks that aren't necessarily garbage, that actually have some good things going for them. So finding these value stocks but then attaching an F score to it can be a way to kind of help you find stocks to buy. So everyone, thanks so much for watching. That's all we have for today's video. I hope you learned a lot from this one. Now remember, if you like this video, please hit that like button. It really helps me out, seriously. The algorithm likes when you hit the like button. And if you want to see more stuff like this, please subscribe. Also, let me know in the comments section if you like this video. Maybe I'll make more if you did. And let me know if you're using Piotroski or some other metrics to invest. So thanks everyone so much for watching, and hopefully we will see you in the next video on the end screen. Why don't you click it?